For financial summary, stay here. For full earnings call recording, skip to minute 2. Speciality financial results for June 2025 quarter with YOY comparison. Revenue 108.77 crore rupees versus 103.11 crore rupees YOY with a change of plus 5.49%. Expenses 90.91 crore rupees versus 87.17 crore rupees YOY with a change of plus 4.29%. Other income 5.74 crore rupees versus 8.41 crore rupees YOY with a change of minus 31.75%. Profit before tax 6.46 crore rupees versus 9.37 crore rupees YOY with a change of minus 31.06%. Net profit 5.12 crore rupees versus 7.64 crore rupees YOY with a change of minus 32.98%. EPS 1 rupee and 12 paise versus 1 rupee.53 YOY with a change of minus 26.80%. Operating profit 17.86 crore rupees versus 15.94 crore rupees YOY with a change of plus 12.05%.
Ladies and gentlemen, good day and welcome to Speciality Restaurants Q1 FY2026 earnings conference call hosted by ICICI Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Dheeraj Mistry from ICICI Securities Limited. Thank you and over to you, sir.
Thank you and good afternoon everyone. First of all, I would like to thank management of Speciality Restaurant to give this opportunity to host this call. We have with us Mr. Avik Chatterjee, Whole-Time Director, and Mr. Rajesh Motha, Executive Director and Finance and CFO. Over to you, sir.
Thank you, Mr. Dheeraj, for warm introduction. On behalf of the management, myself, Rajesh Kumar Motha, CFO of the company, welcome all the participants to the investors call of the company after the approval of results by the Board of Directors yesterday and submission to the stock exchanges as per guidelines. I would like to briefly touch upon the quarter highlights for the information despite the data being there on the stock exchanges website. The total income, standalone income grew by 3.04% during the quarter compared to the previous year quarter. The basic highlight for the revenues are the company had withdrawn the living service charges in the bill from 29th March 2025 as per the decision of the Delhi High Court. This has impacted on the top line in the quarter as we could not pass completely by increasing the menu prices. Second, inflation has been favorable, leading to improvement in gross margins to 70.2% against 69.2% in the previous year quarter. One impact which has happened because of Ind AS, there is a gain on lease and modifications stroke termination of the leases in this quarter, which amounted to 43 lakhs only against 3.73 crores in the previous year quarter. I would like to highlight an important number, which is EBITDA margins on operations basis only has improved from 4.5% to 6.2% because of managing efficiencies on expenses and new restaurants contributing to the bottom line. One major expenditure which we continue to incur is spends on aggregator platforms, which is almost to the tune of 5% of the revenues. During the quarter, we opened a new restaurant by the name of Siciliana by Cafe Mezzuna, which is an Italian brand at Forum Mall, Kolkata. It is basically a conversion from our existing Cafe Mezzuna to an upgraded version, which is Siciliana, Italian brand. The company has forayed into Walter's Burger Store, a one pilot store which has got opened in Andheri West in Mumbai. We are expecting to open good number of restaurants during the financial year. Thank you. We now open the Q&A session.
Thank you, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. First question is from the line of Mr. Vishal Dudwala from Trinetra Asset Managers. Please go ahead, sir.
Yeah. So am I audible to you?
Yes, sir. Please go ahead.
Yeah. So thank you for the chance. Like my first question is like with India's online food delivery market is gonna grow at a double digit for over next 3-5 years, and even in our revenue, 24% is contributed by delivery. So can you elaborate your differential margins between dine-in and delivery? Specifically, what strategy levers are you using, like in-house logistic or something like that?
This is Rajesh Mohta, sir. I appreciate your question here. See, what is happening is we are a dine-in basis company. Delivery is an offshoot from our existing restaurants. Our focus has always been to grow our dine-in business. Delivery is a compounding impact. So when you talk in terms of profitability margins, there is one additional expenditure on delivery, which is the aggregator's commission which gets paid out of it. But on a blended basis, there is not a major differential from a dine-in and delivery base, because the revenue share, etc., which are for the premises, are paid for both the dine-in business and the delivery business.
Okay. So there is no menu segmentation for online and dining, right?
Yes. No.
Okay. Okay. Got your point. And my second question is on your upcoming plans. Like as you mentioned, you are gonna open some new or a refurbishment. So how are you gonna capex them? How are you gonna fund them?
See, God has been kind. As on date, we have a treasury of almost like 162 crores, which is there for our renovation and opening of new restaurants. Plus, the business itself is generating cash on a monthly basis. So we are geared and we are not exploring any possibility of leverage or a fundraising at this point of time.
Okay. So can you like throw some numbers, like how much time will it get to pay back or even break even?
Sorry, break even would mean you want to know for a new restaurant?
Yeah, new ones.
So the new one typically takes between 3 to 6 months to break even on a restaurant level basis.
Both in new and refurbished, both units?
See, refurbished, it depends upon the kind of renovation which is carried out. There the capital expenditure is less and we are targeting the restaurants which have led a big, I would say, good number of years. So here the existing restaurants return is faster than the new restaurants.
Okay. Okay. Got your point. So thank you. That's it from my end. Hoping for the best.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Shalin Seth from Sears Fund Management Private Limited. Please go ahead.
Hello.
Yes, sir, you are audible.
Yeah. Hi, Mota sir. Hi, Avik. Thank
Hi,
you for
good evening,
the
sir.
numbers. Good evening. So I have a few questions. I hope we have the time for that. The first bookkeeping question is, how much cash do we still have?
Sir, as I mentioned, we have a treasury of 163.8 to be precise as on 30th June 25.
Okay. So secondly, we have opened a mill in China. I could just see it in the numbers in the presentation, but I couldn't see it anywhere else, like in the photos or something. From 14, we have come to 15 count. So where was that?
So it is all Asia Kitchens. I will have to just check which mill. We have not opened any mill in China.
Okay. So on the presentation, it says it's a 15 count. We can probably discuss that later then. My last question is specifically on Siciliana. So our focus on this brand seems to be increasing significantly. And specifically, like, we are converting our episode to Siciliana. What is the reason for doing that?
So episode basically in Thane was the spot that we got was too small for episode, and being a wet-led space, the weekend sale is what carries forward the entire P&L. What happened there is, because of lack of spaces, we signed up episode, but then we realized that we don't have enough capacity to fill on Fridays, Saturdays and Sundays. Hence, drinking spot does not have great lunches. Hence, we think Siciliana is a better fit there, and we will be relocating episode to Bandra soon in Mumbai.
Okay, that sounds good. Specifically, Siciliana, in total, we are focusing about 5 units, if I'm not wrong.
Yes.
Going forward, the ones which are planned and what's okay.
That's correct.
And
because Italian has been a very strong focus and growing market in India with very less competition. So we feel, for example, the mall that we're coming up in Palladium, Mumbai soon, there are probably only one other, non-focused Italian, but one other spot that serves Italian. So what happens is, it becomes a one-off in the segment in a crowded market itself. So we feel this is the way to grow in crowded malls alongside Asia Kitchen. So hence, when we do negotiate rental deals, we come up with Asian and Italian, so it makes our store economics way better.
No, I completely agree with you. Like pizzas, India eats pizzas more than anything else. Like biryani, then second is pizzas. So no doubt about that. I think we wish you luck for that.
Thank you.
Just one quick question on the Calcutta property also. Any update on that? When can we expect that to be commissioning?
This year, the plan is to get that particular building up and running with banquets, etc.
Okay, so this financial year we can expect.
Yeah.
Okay. Great, sir. And Walters has come out very nice. It looks perfect. Wish you all the best.
Thank you. We're doing 3 more Walters in this quarter, and hopefully 5 more by the end of this financial year.
And are you happy with the response till now?
Fabulously happy, and hoping that it stays the same. It seems like the trend is great. We have 40% repeat customers, which is a great sign in this market. So hoping for the best for the growth.
That sounds perfect. Congratulations. Thank you.
Thank you.
Thank you, Mr. Chelling.
Thank you. Before we take the next question, Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Vivek from Inga Ventures. Please go ahead, sir.
Hi, sir. Thanks for the opportunity. So my first question is regarding any guidance about revenue growth and EBITDA margin. Okay.
Mr. Vivek, I fully appreciate our business is more seasonal like. We wait for the season September to December to come in, and we would have a better and clearer picture. But yes, with the new openings, the kind of results which we have seen, things are looking up.
So can we assume that the last quarter growth guidance, that is 10 to 15%, will continue?
We are working hard toward it, Mr. Vivek.
Yeah, sir. And any update on the SSG?
See, SSG, yes, we are. Let's say, for instance, if you look at this particular quarter, it is almost like flat or slightly negative, but we are expecting now, going forward in the month of August, September, October, things should be much, much brighter for us as far as discretionary spends are getting increased the way FMCG companies are expecting an increase. So we are also looking forward for a growth there on SSG basis.
Okay. Thanks. That was my last question.
Thank you. The next question is from the line of Mr. Balaji Vaidyanath from NAFA Capital. Please go ahead, sir.
Good evening, sir. Thank you for taking my questions. Rajesh ji initially mentioned that new restaurants typically break even between 3 to 6 months. So assuming, let's say we take 4.5 months on an average. So you're talking about a fixed asset turnover of almost 2.5 times. So suppose you invested 10 crores in a new restaurant, hypothetically, you'll make about 25 crores of turnover. But if you look at the overall gross block number on your turn, on your sales, it's roughly about 1 time. So does that mean that the old restaurants, the fixed asset turnover is, it kind of wears off, the novelty wears off very fast, and therefore the turn is not being able to be maintained?
Mr. Balaji, good evening. I fully appreciate your thought on numbers. Yes, that's the only reason why renovation has become a very important subject for us. And we are continuing to renovate the older mainland Chinas and converting mainland Chinas into Asia kitchens in order to have a higher turnover vis-a-vis fixed assets investments.
And are there any early indications that these renovations are actually increasing the turn?
Yes, sir. What we have seen, the converted and the renovated mainland Chinas have seen a growth in revenues ranging between 20 to 30% on an yearly basis. And what has happened, let's say for instance, since the company is a 30-year-old company with various brands and the restaurants which are more than 8 or 9 years, and wherever we have been able to renew our leases, we are investing into the ambience and totally converting those mainland Chinas into an upgraded versions of mainland Chinas on a standalone basis and trying to convert existing mainland Chinas which are there in malls to Asia kitchen. But they're trying to keep the expenditure almost on the same levels and maintaining the operations cost for those restaurants on similar number basis.
Okay. Okay, sir. Thank you so much.
Thank you, sir.
Thank you. Participants, if you wish to ask a question, you may press star and one on your touchtone telephone. The next question is from the line of Mr. Abhishek Singh from SNS Capital. Please go ahead, sir.
Yeah, hi. Good evening, sir.
Very good evening, sir.
Sir, so my question is specifically regarding Hyderabad. I remember seeing and visiting your restaurant in Hyderabad a while back during COVID, but the experience was very bad, and I believe you guys have also closed out Hoppy Cola, which was available in Madhapur. So just want to understand specifically from Hyderabad geography perspective, what is the company thinking about?
we are extremely sorry to hear that you had a bad experience. But if I may, that's the reason why we have closed Hoppy Polas and the stores in Begumpet. We are only continuing with one in Madhapur. We are exploring with malls, especially Nexus malls, etc., wherein we can get space. And it is now in our target area that we should expand in Hyderabad as well. So in a couple of months' time, you would see some of our restaurants in Hyderabad as well, sir.
That's good to hear, sir. So the second question what I have is, like in terms of geography, which specific states, I think it is Calcutta and Mumbai when I'm going through the report, but I just want to understand from you that which one or two states where we are exactly focusing upon, and the follow-up will be that what is the case over there? Like why are we cherry-picking these two particular states to expand the portfolio more over there?
See, if I may say so, Maharashtra has been the forte for the company and Eastern India, Calcutta, because there are opportunities in the city itself. So what is happening, we are not increasing our fixed costs by increasing our regional office, let's say for instance in Delhi, to maintain that rather than amortizing the existing fixed costs over the new restaurants in these particular regions. But nonetheless, the path is there. Once we are able to saturate some of the cities like Mumbai, Kolkata and Bangalore, we would definitely move to other cities of Hyderabad and tier 2 cities and NCR region in particular.
Okay. Thank you so much, sir.
Thank you, sir.
Thank you. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We will wait until the question queue assembles. The next question is from the line of Mr. Abhishek Singh from SNS Capital. Please go ahead, sir.
Yes, sir. Just one more follow-up question. Actually, I want to understand what does the company think about it. So nowadays, a lot of companies, specifically if I talk about like Rebel Foods, they normally, they normally operate on the basis of dark food chains, right? I mean, they don't, I'm not getting that word, but I want to understand what is our company thinking about such kind of a model where we can also, maybe experiment on such a model which will be specifically used for the delivery model, if I have to say so.
Right. So I'll take up that question. So currently we do operate dark stores from all our restaurants. In fact, we were one of the first restaurant company to start that. For example, a mainland China also delivers food from Asia Kitchen, a brand called Hakka, a brand called O Calcutta, and this adds to the total revenue while keeping the labor and the staff cost the same. Apart from this, we also expanded into 11 cloud kitchen, pure dark kitchen operations in many cities apart from Mumbai, and we've been successfully operating those. Another thing that has come up, another great brand that we feel has great potential for the future, and it also is our first QSR brand, which is Walter's Burger. We've done our first pilot store, and we also in fact started with 3 cloud kitchens. And now we've added the 4th one as well. So total 5 delivery points, but 1 physical store. What we feel is when you do have a physical store, your customer confidence increases. Hence, the delivery sale increases in that matter. The difference here is the store size is probably only 600 to 500 square feet. Hence, the capex, rental, operation costs are very, very minimal. But because it acts as a marketing store point, it helps the delivery to grow tremendously. And we'll be doing another 3 in the quarter, which is Walter's Burgers. Apart from that, we're also expanding 7 new restaurants in our Asian, and 2 of them are going to be Italian within that. All these restaurants will also have dark kitchens of our other brands, hence reutilizing assets and also increasing top line.
Got it, sir. That really helps. Thank you.
Perfect. Thank you.
Thank you. Participants, if you wish to ask a question, please press star and 1 on your touchtone telephone. We will wait for a moment. As there are no further questions from the participants, I would now like to hand the conference over to the management for closing comments.
We are extremely thankful to all the participants to have spared time out of their busy schedule to attend to our investors call, and we are happy to answer any specific questions if it can be sent directly to us, and look forward to better quarters and more interactions going forward. Thank you so very much.
Thank you, sir. On behalf of ICICI Securities Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.